All right, well, let's get it started. Welcome to the second community call dedicated to Keeper Pool. Thanks everyone for your time, for your enthusiasm and involvement. We highly appreciate everyone's contribution. Uh, uh, Quick overview who we are and why we are doing this. Uh, After events on 12th March, we started this initiative, and behind this idea are Atomica and Prototypher teams. Atomica is a risk transfer protocol, and we are building a few products for risk mitigation and transfer. One of the products allows you to bootstrap your risk market for your entity or to buy a cover for any existing DeFi product. And the other mitigation product allows you to protect your vault when it achieves a critical threshold. And Prototypher team, we're building a few products for MakerDAO ecosystem and Gnosis. And why we are doing this? So basically, we want to allow the first of all events that were recently, and we would like to bootstrap a product to allow any individual with any capital to participate in this pool, who manage a non-custodial keeper bot to provide strong competition for a keeper market and get discounted collateral and to gain some yield for your assets. Yes, that's a main idea. So why we are doing these community calls? The main goal is to keep ongoing pipeline with the community, to discuss the open questions, to hear the suggestions, to make the product better and more efficient. And we are suggesting for this call the next agenda. First of all, our team will show the progress we did since the last call. This includes smart contracts of pool and KeeperBot itself, some sample of user interface, and our vision for building strategy and DAO structure. After that, we will discuss all these elements, answer your question, and provide our current open questions. And also, we will outline our next steps for the current week. But before this, I'd like to suggest to make quick intros for newcomers, as we did the previous week, to understand who are here, what are your goals, and how you can exactly contribute to our initiative. And before this, I'd like to make special thanks this week to Aaron Boyd, who put together this proposal for a Gitcoin grant. Thank you, we're working on it right now. And also additional thanks for Sid, who provided additional valuable feedback this week to us. So I see a few newcomers here. Let's proceed one by one. Quick intro, why you're here, what are your goals. I see Brooks. Would you like to make a quick intro to the community?
Sure. Hello. Yes, I'm the other Boyd. Yes, last name Boyd, so I'll be the Brooks Boyd. I joined the call first this time, but definitely not the first Boyd in the community, it seems. I'm in Wisconsin, and I'm a developer. I've been working with blockchain development sorts of things for a couple of years now, and I'm one of the co-leaders of a local meetup group focused on blockchain technologies. So I'm interested in joining both to be connected to another community of blockchain-related blockchain interested people, and also to be able to contribute development if needed. I generally know full stack, although focus more on front end UI pieces for that as well.
Do you have any experience with MakerDAO ecosystem, or more specifically, Keeper bots?
I have some experience with the MakerDAO contracts in general. I've tried opening a CDP myself and working through the compound interfaces and familiar with their general workings. I have not worked with a keeper bot yet at this point, though I've worked with other scripts and bots for other purposes in general.
It's okay. Nice to have you there. Shelly, would you like to make an intro? Okay. Nick, would you like to make an intro?
Hey, how's it going? I'm Nick. I run DeFiPrime.com. It's a site about DeFi and open finance. So I'm just interested in your initiative about bullet approach to keepers, and also I proposed the idea of bringing DAO into the name of your initiative.
Yeah, I remember this. It was a good suggestion. Thank you.
Yeah,
nice to
cool.
hear
Yeah.
to have you here at this call. Okay, Steven, I remember you were at the previous call, so Hans, would you like to make an intro?
Yeah, hi, can you hear me?
Yeah.
Okay. Yeah, I'm just a software developer. I'm just interested in blockchain as a side project, so it's not my main job, and I'm just here to see what you guys are up to. And I'm interested in this whole process, how you would do the proposals, how you would get the grants, and more specifically in the DAO structure. So how would you build a new DAO? So that's my main interest. And then again, of course, to maybe earn some yield later when this is all working.
Okay, good. Thank you. Okay, Mayor, would you like to make an intro? You did some previously, but
yeah. So I don't know. I'm like sort of a developer. I work for a permission blockchain company doing like intra-bank permission blockchain networks. But as time has gone on, we've focused less on the blockchain and more like distributed nature of it. I'm super familiar with like the Maker ecosystem in general. I've been using Maker since 2017. I've been meaning to run keeper bots forever, and I was about to start one just before the crash, and then this whole initiative started, and I figured might as well just hop onto this initiative and see about making it easier to run for everyone, not just me.
good.
I write like Python scripts and stuff. I can write Solidity and write tests and things of that nature if you guys need any of that.
Good. I see this call we have more developers than we did.
That I think you might be muted if you're talking, or maybe my mic's not my.
I think it's not muted right now.
I can't. I'm not hearing you. I don't know if anyone else is.
Yeah.
Oh,
Yeah. Do you hear me?
The D.
Yeah. I see that.
I'll just change my audio.
I can hear both of you fine. Yeah.
Okay. Okay. Thank you for your intro. I see a few more new people here. Pixel, would you like to make an intro? Okay, I guess everyone other did the intro before. If I missed anyone, just start your introduction. If no, we go ahead. All right. So I suggest to start, and as a first point of our this call, our engineer Kostya will show our progress on the smart contracts we did this week. Kostya, can you show us?
Hello, everybody. So I'm sharing my screen. I hope you can see my screen.
Yep.
Great. So what we have currently, here is structure. We have pool contract and we have two adapters. What are adapters? Adapters are a source of revenue for this pool. So currently we have the main one is maker flip auction adapter and chai. And here are some open questions. The first one is about DAO. Second one is about what exchange we can use to sell the collateral. This could be Oasis trade or 1inch, so this is something to discuss. The next question is what feed we can use to estimate prices. So currently we have Chainlink, for example, we can use it. And there are some questions regarding bid strategies and regarding how we can calculate token rates when people join in the pool. So the problem is that when we have active auctions, this money are locked in Maker. So it's hard question. Will we lose money or will we win money from this auction? So here is tricky question: how to estimate token rate. Okay, so pool contract has two methods: join and exit. These two methods are for participants, and these two methods are for DAO. So we need to DAO can vote for particular adapt and edit or remove it. And adapter. So we can check if this adapter is active now, if what's total allocation in this adapter. So for example, if we're talking about make a flip auction, or what's total amount of DAI allocated from the pool for this adapter. And payback function it's to when we win the auction and sell the collateral, exchange it for DAI, this function to pay back to the pool. And the last one is exit function. So if some participant wants to exit from the pool, this function to, if we have some amount of DAI which is not locked, we can use this function to exit from Maker and send this DAI to this participant. Okay, so here is pool contract. It's RC20 token. So we have join function, and we accept DAI and exchange it to pool token. And here is exit function. So currently we estimate the amount of token based on this pool contract balance. So here is one option, open question: how to estimate it correctly if we have some tokens locked in auctions. So this is the first question.
Would anyone have any comments on that?
Okay.
Sorry, I was just going to say, maybe for simplicity, you can just say anything that's in flight you don't have access to, because you're electing to remove your liquidity from the pool. So it's kind of like an implicit intention that you don't want to be involved anymore. So yeah, I mean, for simplicity at the start, but yeah, maybe something more complex later on.
Okay.
Although, are you suggesting that the auction will no longer be able to continue if someone withdraws mid-auction, because we won't have the funds to actually honor the bid that we've made?
John, what do you think?
For altering bids, what I've kind of leaned a little more towards recently is participating near the end of most auctions with the idea of not rebidding. I guess balancing, it comes down to balancing the gas cost of putting in a second bid versus, for what kind of benefit do you really get by, bidding lower? How much success are you going to have? So I think we could get away with just making it, we bid once, we kind of bid our best price. And if it hits, it hits. If it doesn't, it doesn't. And we just kind of focus at more on the end of auctions. So what I'll kind of get into is a formula I've been working on for determining whether or not, okay, what is our, best bid price based on certain, the current environment. And then if that is above the current bid in the system, then we, put our bid in at that price, and we just kind of accept it. But that's definitely something that's open for discussion as far as how often it can be beneficial to try low, but then be prepared to rebid versus the simplicity of just a one bid.
I think that's a good way to go about it. I'm cool with that.
Single bid, just best price.
Yeah, single bid, best price, and like that way we still form the function of there is bidder on all the things, but if other people are outbidding us, that's good, arguably.
Cool.
One question though, instead of letting people exit during bidding, can we just reserve a certain amount of assets, say that the pool is utilized and during bidding periods, and only allow withdrawals outside of bidding periods?
Yeah, I'm open to that. We had a call with Sid earlier today, and we talked a little bit about that. So if we're going to go with the peacetime, wartime setting structure, I think we might also have kind of step functions in between. So I've just been using more jargon like DEFCON 1 through 5. And then, when you're in DEFCON 5, I always forget. I don't know if DEFCON 1's the worst one or DEFCON 5 is the worst one, but whenever you're in the super volatile range, just there's no withdrawals at that point. When it slows down, then there are withdrawals, because we want to make sure that people aren't pulling assets out of the vault, out of the vat. So I'm fine locking it during that time, or having dynamic withdraw delays, where during DEFCON 5 maybe it's a 48-hour withdraw delay. During DEFCON 1 it's 0, 2 it's 12 hours or something like that. Because, we need to allow for the system to move assets back into the pool to then be withdrawn.
And why DEFCON 1 and 5? It's I'm still not getting it.
So it's to make it less binary, because there are stages between gas prices are at 2 gwei and there's really not that many liquidations. But maybe there are little tweaks in the price here or there, and then there's the complete and utter meltdown like there was the other week. There's
yeah, got it. I was asking about DEFCON itself,
oh yeah, the term, maybe it's an American military term. It's our current military readiness.
Yeah, it's a very American term.
Yeah, so maybe that's not as good.
Yeah, maybe something that everyone is used to, when you're flying,
movies.
How the air is displayed, or alert level
We could do like code green, code yellow, code red.
And we can use the same system, so it's although
naming I feel like is the least of the worry there. But as long as like we're gonna use levels and levels determine the level of risk to the system, I'm cool with that structure.
That also locks us into 5. 5 seems to make sense, but we could do 3 to start or something like that.
Yeah. Does anyone know about any equivalent to Wix, which is the volatility ETF, I guess, VIX on traditional traditional markets for stocks and bonds, but either an equivalent in the crypto space for, let's say, the basket of we now have ETH, BAT, and USDC collaterals, right? It would be nice to really like rely on the volatility, like if there will be a programmable access on chain to some number, we could just tie it to that contract that calculates that.
That's supposedly, so the VIX pulls a lot of information from the options market. I don't know the exact pricing, but there's not a robust options market quite yet for crypto. But I think what we can do, especially with Uniswap v2 getting launched yesterday or soon, at least the docs were out yesterday, it's supposed to make things a lot easier for calculating kind of doing price calculations over time. So we could come up with, there's pretty standard volatility metrics out there if we're taking price inputs. So we just got to figure out the time frame that we want to, okay, or we're talking about hourly volatility. Maybe we do a 6-hour volatility rating because that's the length of the vaults, the auction time periods. But it should, if no one else is doing it, should be pretty easy to put together as an oracle.
Okay.
Yeah, Uniswap v2 has some improved price kind of metrics. I was reading the white paper today about it, which looks pretty promising, and direct token to token swaps as well, which is just great.
Yeah, a lot of cool stuff in there.
And those flash swaps might be useful.
Yeah, that's something I wanted to mention later as well. It's like, if even we could bolster the pool, this is pretty complex, I guess, but we could bolster the pool if there's really profitable trades with like token flash loans from Uniswap v2.
Well, the concern though is, correct me if I'm wrong, but the auction ends at a very specific time, right? It's like a 6-hour thing, and then it just ends, and then everything gets processed.
Right. So it's not like a single transaction.
Yeah, you can't just be, if it was like, eBay style, like, bid now, buy it now. But yeah, there, I don't know, maybe there's something.
Yeah, by the way, I believe that the auctions, at least for collateral, in MCD will get a lot of changes over the next like 6 to 12 months, and we shouldn't probably over invest our efforts in the areas that will be like try to go around and optimize our strategies about things that are very likely to be resolved. Like, for example, I think like multiple bid may be implemented, and sealed bids might be implemented. Right now, the tech kind of got to where it becomes feasible. So weekly style, kind of the same type of auctions that are being used after similar attacks on Federal Reserve auctions, where they auction treasuries or TARP warrants. They have been attacks, like some firms, some market makers, keeper bot operators were sued because they were the single bidder situation, right? Like just like we had on March 12th. And the solution was to introduce multiple bid, where you bid basically full entire lot, X price, but if you want to still get something, right, you bid higher, but your percentage of the lot that you bid might be smaller, right? And everyone is sealed, and then it's reveal and lock, and whoever wins wins, right? And this way, I think the biggest problem right now that the 6-hour delay, right, introduced, it comes at a huge cost. The probability of a complete default increases, right? Because, and what I mean complete default is that what does 6 hours mean when the price is dropping very fast, right? It means that you will have severely under collateralized, you have a much greater risk of having severely under collateralized walls, which means that the surplus shortage may grow in the case of a really badass black swan event. Am I getting it right? That you gained more time to allow keepers to participate, but the probability of future maker dilutions is increased because in 6 hours the price may drop so much where there is basically not enough collateral to, even at the market price in 6 hours, is still not enough to make for that amount. Am I right? Or
yeah, I mean, it really also incentivizes people just to participate at the end, so it doesn't add a lot of benefit in extreme scenarios, because everyone's just going to wait till the end to put their bids in anyway.
So what does it mean?
Price slippage.
For the system. What does it mean for the keeper? What does it mean for the maker vault holder? What does it mean for the maker token holder?
I mean, I think overall it's not a huge improvement on a 1 hour bid and window. For day to day, it might be fine, but for the things that are actually a systemic threat to the system, it's not that much of a benefit.
Okay. Any other thoughts?
Arabic.
Okay, guys, let's continue then with this contracts overview. Konstantin, what other things that you would like to show, and what are the questions and any help that you need?
The next point is how we add adapters, how we remove them, and how we define allowances for our adapters. So this is questions for DAO. So currently, I just simplified it. So I set maximal allowance. So adapters like maker flip option can allocate as much as it needs.
Can I give you the phone number? Okay.
Okay.
The number is 201-920-7.
Okay. So once we added these adapters, here is make a flip auction adapter. Okay, just to simplify it, how it works. There are three main functions: tend, dent, and deal. So these functions we needed to participate in auctions. So tend, this function is used in the first phase of the auction. So what we have here, we allocate from the pool required amount of DAI. Currently, maybe we have some DAI in the bot. So here's how allocation works. We check how amount we already have, calculate the difference, and take some amount from the pool. So currently we have allowance in the pool, so we can take some amount from the pool and join to the join contract to participate in this auction. So once we have required amount of DAI, we calculate 10 bid according to the strategy. So this is another question, bid strategies. So once we have it calculated, we bid it and activate auction because we need to know in what auctions we have participated in. Then is a similar function. It's the second phase of the auctions. So it works in a similar way. So if we need some amount of DAI allocated from the pool, then dent. And if we win this auction, we can invoke deal function, and in after this we can take the collateral and exchange it. So this is another big question: what we will do with collateral. So currently we can check, for example, current price in Chainlink feed, and check what price we can get from Oasis Trade or from 1inch, and if it's in some appropriate range, we can sell the collateral, and after this we can pay back it to the pool. When somebody outbid our bid, so we have some money in BAT. So here is this function release. So release function will check if somebody outbid our bid, so we can deactivate this auction. So if in the end, if we don't have active auctions, we can exit from VAT and pay back this money to the pool. Yeah, so this is my current progress. These contracts are in active development, and I'm testing it on Coin and test chain. So this code is in progress.
Great, thank you, Kostya. Maybe there are some questions regarding Kostya showed to us.
No, I can't. It's funny. I keep trying to scroll up on the screen that I'm not controlling to read different things. But is this repository public? Can we view it there and make suggestions and so on?
Yes, as soon as I will have some tests for this functionality, I will publish it.
Yeah, because I think something like test cases and so on is something that it's easy for people to contribute with, because it's kind of hard for someone like myself or another Solidity developer to jump in and start messing around with your code. But something like test cases written by an external contributor is actually really helpful, because it kind of interrogates the features of the code like completely from new. So
that's a very good point. Yeah. So Mir, would you be, or someone else?
Yeah, I'd be happy to take a look at it if you publish it. I'd write some tests, and I'm sure other people would too.
Okay.
Yeah, I'm kind of in more of a support position because I already have a full-time job, and this is kind of just a side interest based on what happened the other week. Yeah, so something like that would be ideal, or even you know, basic things like documentation and style and you know, security checks and stuff like that.
Okay, that's very cool. So and who was the first? Was it Mir?
Yeah, I can help write tests as well and any documentation side of things that you need.
All right, cool. Are you guys Telegram handles the same? Just
No,
post it in the chat, and we will we'll work with this so that basically you guys are connected with Konstantin and can work on that. That would be very cool to use this collaborative approach for at least like the test. You're making a very good point that it's kind of a different pair of eyes looking from a different perspective.
Yeah, yeah, and plus we could raise issues as well and have them sort of the conversation happen.
Yeah,
not always on a call like this. It can happen in GitHub and whatever.
Okay, very cool.
Yeah. Sorry, were you asking for our GitHub IDs or for Telegram or?
Yeah, if you can put in the chat the GitHub IDs, Telegram chats, that would be probably best. I think. What do you?
I think you have me on Telegram already, but I'll add GitHub.
Konstantin, would it work for you?
Yeah.
Okay.
So looking forward to work with you. I will try as fast as I can to publish it as soon as I'll be a little bit more confident with this code.
Yeah, sure. Yeah.
Okay. Don't be afraid to share it earlier. Then you're very confident. We still need.
Yeah. I want to test some cases, so I need a little time.
Yeah.
Okay.
Yeah. I have a question for the group. Are you guys like the Atomica team? Is this like your sort of full-time work now, working on this, or is this just one project of many?
Yeah, right now it's our primary project, which we kind of put everything on hold. What we've been working on, and we, as Vadim described, two projects. One is risk mitigation tools like graceful unwinding contracts, which you can hire. Well, not hire. It's free. It was funded by Maker Foundation. To build contracts and an oracle that watches over your vault and will trigger an automated liquidation before the keepers can buy it, right? Which should work in most cases, right? But sometimes I mean, there is no absolute guarantee because you're unwinding gracefully, right? And the second project is the risk markets to basically pools that transfer risk of, let's say, hacking of compound or loss of admin keys, right? For a premium, you can transfer to someone. So there is a huge pool component in there because the risk capital providers pool their funds, right? There is a DAO component in there, and there is the claim part in there, and the pricing part. But so half of that infrastructure we have already built, like this. The reason why we could do this pool part very quickly and the UI, right? We already have the UI and the pools for the other, for the risk market, right? And we understand how the risk transfer works. So we just thought, okay, well, there is a problem in the market, and we still need to bootstrap community for people who are interested in deploying capital into various, basically buying the various kinds of risks to earn yield, right? And apparently we looked at it and we thought, what kind of risk are these keepers are buying into, right? Apparently it's a risk of low volatility. If volatility is very low, I will not earn more than what my idle money can do, right? But if it's very high, I profit, right? Assuming I can operate infrastructure and all of that. So And most importantly, we saw the opportunity to fix what I think right now is like for the next at least like 3 to 6 months is probably the weakest point of like the reason why I would say why they should not be buying maker tokens. I would say wait for like 3 months, because in the next 3 months there is a high probability that whatever coronavirus completely has nothing to do with crypto will just start putting markets on the pressure, and we may have a situation where the collateral, if it will be flash crashed for like several days or even hours, and the venues like BitMEX would not stop, right? It could bring to like 1 day flash crash to Ether $1, right? That means that maker token holders will be diluted to the point of no return, right? Because surplus will be so high. Yeah, the next day it will all recover, right? But maker token holders will now have a shortage of a 70 million DAI, right? And it will dilute the maker holders. So the investments of Andreessen Horowitz and Paradigm and all of the people who hold the maker tokens, right? We will need to issue, I don't know, 500 million or billion maker tokens, right? Now we have a supply of 1 million plus what was sold last week, right? So that risk is very high right now. And the reason why it's very high is because right now it's still the new collateral like USDC, it was added that quickly just so to help prevent the situation from happening. And because it's completely outside of control what happens with external markets due to this coronavirus or what have you, that is the problem. And I think it will be likely to be fixed through multiple things, including introduction of perhaps new auction mechanisms that are much faster, that do not require 6 hours, right? Introduction of new collaterals that will occupy basically the DAI supply and will be much more stable, right? And will not drop as fast. So these are things that will be happening. And what to make long story short, I'm sorry, I kind of switched into a completely different direction, but we basically deal with we specialize in creating these pools to transfer risk, right? And we find it very interesting, a lot of interesting risks, and the need to transfer them, and the capital and appetite to buy them, right? So we thought, okay, why don't we start dealing with this risk right now? And our intent was always to build the rent-free, zero-fee Uniswap-like constructs, right? And the risk mitigation tools, we basically, our hope for revenue model is like, okay, we can sell mitigation tools, like host an oracle that can prevent you from having losses. And then there are zero-fee markets to transfer the risk if you want to, be it a hack, admin key loss, or liquidation of your wallet.
Okay.
Yeah. Let's continue with the agenda. So any other items on your list of questions, Konstantin?
Currently not. So the idea is that we external bot can invoke these functions, which are public functions. So this is another part of our work to provide a service which monitor maker contracts and invokes these functions. So that's all from my side.
Okay, thank you, Kostya. It was very interesting, and thank you for your comments. Group, thank you. Okay, let's move forward through the agenda. Right now, let me show some UI we prepared, initial UI. Let me share my screen. Okay, so basically like first version may look like this. It may be changed for sure. We will remove some components, but it may look like this. So basically, there are some basic stats which we will also extend in the future, and pretty simple frame to interact with pool. So you can add and remove liquidity. It's pretty straightforward. So yeah, it's like the initial version, and you can provide some comments and desires what you would like to see. So maybe some additional statistics on auctions we participated, or any additional stats, or anything you'd like to see there to make your usage more convenient. If there are no comments, yeah, it's pretty draft version which we will evolve, but
maybe maybe a second box or a list that shows the last actions and the profit that the pool's taken, or something like that.
Sorry, the connection was poor for me. Can you please repeat?
Yeah, I was saying maybe a listing of the most recent actions that the pool has taken, and like the profit or loss on all those actions, or maybe on a separate screen or something. I'm not quite sure.
Yeah, it's a good idea. We are considering on such dashboards to show our actions and other stats to make it transparent as possible. But yeah, it's a good idea. Thank you.
And also, if you go down the DAO route, then the same thing, like a list of all the governance actions that have been taken and so on.
Yeah, it makes sense. Agree.
Like Maker does, where they say, oh, we've adjusted the stability fee, and then the next day they adjust something else.
Yeah,
like maybe a link to like a governance dashboard or the DAO UI that you can see all of the DAOs. So link to that DAO. Okay.
Yeah, agree. It's a good idea. Okay, any other comments, suggestions, critics? Okay, you're free to provide your comments any other time in chat. Okay, let's move forward. Right now, let us overview our vision on settings for bidding strategy and DAO structure. After that, John, would you like to walk us through this?
Yep, can do. People see the screen?
Yep.
So coming out of last week's call, and I shared this in the chat, there are a few things that we wanted to clarify. I kind of put together a rough product structure where, a couple main goals, consistent returns from the Keeper system, but then also offering a backstop to Maker as a whole. But then having it be DAO managed, having it be open access for contribute, but also not make it burdensome. We don't want people, if you're going to have a DAO, you can't have it be something that people need to be, where decisions need to be made continually around this, or, okay, now things are getting bad, let's get the DAO together and vote on changing settings. You can't really do that. So the thought was to have these peacetime and wartime settings that, one's running while things are cool, one's running while things are intense, and then maybe some step functions in between. We've discussed that a little bit. So then the question became, okay, what are those settings, and then how do we adjust them in a automated way, and then just make it so that the DAO can manage that automation. So put together some suggestions for the settings, but then talked to Sid this morning on an earlier call about kind of how we want to, what is relevant. So I'll just kind of run down a few of the things that I think kind of make sense. Some of this we already touched on as well. There doesn't seem to be much benefit in participating in the tend auction portion or being an first or early bidder. So unless no one else is participating, I think we're just going to operate by participating near the end of the auctions. So last hour or so, that can be something that can be configured as a setting. And I don't think that needs to be any different in peacetime or wartime. We just do the same thing. One of the things you brought up was how many auctions we can monitor at one time. So this is a takeaway we're digging into right now, is how can we get consistently good information about the state of the auctions. Apparently when things were running pretty hot, they were running up to 5 full archival nodes to get real-time information back on the vaults. I don't know if that's as necessary for what we are doing, but something we're actively looking into is how do we get that access to the data around how many vaults are out there available for auction and what's the state of them, so we're not, putting in bids when we don't need to or don't want to, or we're not putting in, bad bids. So a couple other considerations were, the bid price relative to the current bid price relative to the current price, how much gas to use, what to do when outbid. I think we're going to go with a one bid system. And then another consideration was profitability backstop. So around the bid price, I'll get into it here in a second. I put together a rough kind of metric where hopefully we can have a our best price, based on our settings, our goals, what state the system is in. If we want to get in peacetime, if we're down with a 5% return, on this, then okay, well, what is taking into account gas? What is our break-even price? And then we only bid if the current bids are lower than that. Profitability backstop is, okay, let's say ETH goes on a 4 or 5 month bull run, nothing's getting liquidated. We're going to be paying some sort of cost for the infrastructure, to get us the data that we need to monitor everything. Does it make sense to power down at certain times? So limit costs. So those were the main settings, and I'll just hop real quick into kind of the pricing metric proposal, and then take feedback from there. So the whole point is to get down to a max bid price. And then we just evaluate that bid price compared to the current max bid in the bid window, which is, if we're going to say, the last hour or so. So to get there, we have a few inputs: the current price of the collateral relative to the loan assets, so ETH and DAI, the size of the vault, the max gas cost, which we can set at 150% of the current fast GUI price. So we want to take that, have some knowledge of what the contract, the gas limit is going to be for the actions we need to take, and then turn that into basically a cost in ETH that the transaction is the bid is going to take. So vault size, gas cost, and then our target return, which is going to be based on one of the metrics that changes based on where we are in peacetime to wartime. So I'm not sure if this works quite yet. I've started modeling it out in a spreadsheet. And it kind of works, but I think I might need to tweak it a little bit. But I have a rough formula here, where those are the inputs, and for any vault at any given time, we can get to this max bid price. So for this, okay, we want a target return of 10%. Current price is 130. Size of the vault is a 200 ETH. The max gas we're going to pay is 0.4 ETH. Okay, our bid price is going to be 117. If the current, an hour before, if there is a bid. If the max bid is lower than that, we'll just go in at 117 and put that in. And then a couple things to maximize returns. We're looking at using spectrum pricing, where you can put in multiple transactions on the same nonce with different gas prices. So they'll kind of race against each other, and then one will get processed, whichever one has the lowest gas, but still makes it in. And then possibly use some randomness generator to avoid front running, to not always go in at the exact same time relative to the end of the auction, and then also to not always do the exact same pricing formula. So just keep it within a couple, 1 or 2%. But Sid seemed to think that if we set up a very reliable bot, people would just monitor it and front run it. So I don't know if these things would help, but just some stuff I kind of threw out there. So I will open up now to feedback. This is on the pricing, and then the next thing we'll touch on is the DAO.
Very cool. What are the questions or items where you need feedback or help?
Getting the data in, I think, is one of the big things. So what is the cheapest way to have reliable data availability? And then getting the gas information, estimating that will be another big one. As far as the formula goes, I can go down a little bit. I literally just started working on this while we were talking earlier, is breaking down threat level and then like really using the target return. Because if we're bringing the price, of the asset and the gas into the calculation for target return, we can use target return as our main threshold. And then we just have to worry about, that's our keeper setting. Then we have a pool setting as far as what the allocation is to the VAT versus DAI that's basically on deck to go into the VAT versus chai or any other assets that we have. And then, what I don't have right now is the input to determine the threat level. So I think that's the other thing that people are talking about, price volatility, using that as an input. I think even the sheer number of vaults or number of auctions in the past X period of time could be an input. But yeah, that would be something that we haven't gotten much feedback on, but would be open to feedback.
Okay.
I just have a question about the target return concept in general. So is the reason for this just because we can never guarantee, if we cut it too finely, we can never guarantee that however we exchange the collateral that we win, we might actually be in a slight negative position. Because if you win any percent greater than 0, then that's a win, right? Because the infrastructure is going to be running anyway, right?
Yeah, and that's why we can have a pretty low. So the idea for the target return, it can be quite low in the beginning, but you have to it's almost like baking in how much you expect the collateral price to change in the period between when you put in your bid, do that calculation and put in your bid, and when everything settles and you're able to actually sell the collateral. So you want to give yourself a buffer so that you're not getting, chopped up in, downward price movements.
Yeah. I guess when I was first thinking about this on the last call, I was almost thinking in my mind of like a variance model where some small percentage of auctions are actually losing, but they're well outdone by all of the ones that are massively winning, if you know what I mean.
I think
because most of the auctions are at a discount, right? Like by the nature of the maker system, yeah.
Right. And I think that's kind of the goal. We could set that to be like 2%, and it would be probably participate a good bit. I think it's really just how much you want to put in with, I mean, this takes gas into account. So I think that, that's an important factor.
Yeah.
But, you're going to have gas fees moving assets in and out of the VAT.
I was just thinking that the biggest determinant of whether an action is profitable or not is probably the external factors, like slippage on the exchange that we're going to sell on, and current gas prices and things like this. I just was questioning setting an internal limit ourselves when there's probably higher external influences, if you know what I mean. I'm not sure. I need to sort of think about it, but I'm not trying to discount the calculations that you've done.
Yeah, no, I get what you're saying. I think we're trying to get to the same thing, because you want to, I'm fine for more American analogies, getting a lot of singles and not, and then you get some home runs here and there, but you don't want to miss out on those small returns too if you can. Just how do you kind of map it to the goals? So like, I think if we have the peacetime settings pretty low, we can operate. The reason for having it ramp up is because hopefully as the threat level increases, our participation we'd almost want it to decrease, because we want to have assets available for any situations where there's systemic threats to Maker from that vault auction, right? Like that becomes our priority. It's not make as much return, be damned. It's kind of make as much return as we can while also providing backstop.
Mm-hmm. So with these threat levels, so 1 is when the whole thing is collapsing, or like 5 is when everything's collapsing?
5 is collapsing. So consistent, low gas. So it's like a low gas situation. It's the low cost of moving capital, so we can keep a lot allocated in interest earning situations. We want consistent small returns. We're bidding a lot, but maybe that we put that down to like 2%, and if we can get, because you're going to have variability, but if we get between 1% and 3% on those, like, okay, that's a good return for a couple hours work.
Okay, it's sort of makes sense. Although I thought whether in the times where there's a liquidity crunch and everything's going crazy, you would almost, if you want to take the role of providing a backstop for Maker to prevent like zero die bids and so on, you'd almost want to take any return just to prevent that from happening.
So yeah, I'm kind of using the target return. In those situations, we don't want to lock up capital, right? We want to always make sure we have capital ready to bid in case things go south. So that's why I would say.
I see.
Yeah, because other people are going to be taking the 10 and 15% returns, but locking up their funds. So then once I'm taking the increased return as an indication that people are kind of falling out of the game.
Right. So you're saying, in times of like crunch, you want to reduce the actual number of auctions you're participating in so that you have the capital there ready, or decrease the number of actions you're taking and only go after the ones that are necessary.
Yep, exactly. And there's higher gas at those points too.
There is a curve where the profitability of keeper operations, right, it goes exponentially much higher when there are problems and some keepers run out of liquidity and so on. So you don't want to deploy all of your funds too early, and of course you don't want to deploy too late. Plus we want to have this backstop where we basically will hard code a parameter changed by governance on how humane should this operation be when it comes to harming people, right? Should we build it to harm people, or should we introduce a circuit breaker? And the circuit breaker will be is that, whatever capital we have, if there are no other bidders, we promise not to bid below, 60 cents on the dollar, so that they at least have legs. So we're not going to take we can take an arm, but not their legs. So that's kind of
take it all. Code is law.
yeah, but at least give some assurances that it basically it will not be used to harm. And because we know that such circuit breaker like backstop could be built in, why not we build it in? Because we know it's possible and it's the right thing to do.
Mm-hmm. Yep.
Okay, cool. Yeah, so I'll share this stuff out. So this is in the doc now. I'll share the spreadsheet.
Before we move.
I'm sorry, go ahead.
Just one last question before we move from pricing is, does the time delay variance like really do that much to prevent front running? Like I imagine that variable, just making the price variable affects front running, and submitting a bid an hour before just increases the chance we get outbid.
Yeah, I don't know. That's definitely something that we need to look into and talk a little bit more about with folks that are, have more deep experience with putting in actual bids and look at some of the participation. But I think we can have it as a, we can just have the time that we bid as a setting, and it seems, and then monitor it. And if people are outbidding it, then we can, the randomness could always be added on later, right?
Yeah.
Just kind of throwing it out there. But yeah, I imagine the price one would be more of the, because this is all open source, so you can see the pricing formula and they'll know where we're at.
Yeah. Yeah, I mean, I'd be down to play around with that. But cool, as long as you guys are open to making adjustments there, I think that in general the formula is pretty good.
Can I suggest maybe you guys buy some gas tokens when when the prices are low, so just in case when shit hits the fan, the gas price is going to skyrocket again, you can able to get in there.
Yeah, that's good. That is a good suggestion.
And actually, I would also include the gas prices in the VIX, quote unquote, because when that spikes, it's usually when the volatility is also getting out of control.
Okay.
So like the market for existing gas tokens.
Yeah, so just when you see, the gas, when you're trading on Ether and the gas prices start going high, like on Ether gas, whatever, because the Ether gas station, they start creeping up, as soon as it goes above a certain level, you can't wait forever to get your trades in. So I think that's also maybe a good indicators when it's getting a little bit too volatile in the market.
Yep, cool.
Yeah, I just added.
Can you check that without an off-chain oracle? Can't you just check if gas tokens, like the rate of gas token minting, would that be available on-chain? Because if people are minting gas tokens, gas is cheap. But if they're using them, then it's not.
Yeah, well,
yes.
Yeah, it might be that
John.
More people minting gas could be a signal. Like if it's a lot of people start, well, it could be that someone started using it for no volatility reasons.
Yeah, I have another question.
Okay.
I have another question.
Mm-hmm.
I don't know if you consider, John, that gas stations is for general transactions, and actually you can monitor exactly what transactions goes to the auction system and exactly see how much gas are they willing to pay. So if you have a way to hook up to the mempool and filter out what are the transactions related to the MakerDAO auction system, you can see that they might be completely different to what the ETH gas station is telling you. So that is one thing. And another thing that I could probably consider is the speed of gas increase. So if it is increasing how many weight per second per block or per few blocks, and that can also be retrieved well from a node and also from the mempool. Make sense?
Yep. Yeah, those are all great things to consider for this. Because that can get pretty costly. And in the formula, basically what it can do is start pricing out. If gas gets high, well, I guess all the lots are basically the same, so it doesn't really matter. I guess the vault size, I guess it's lot size that really matters. But if you have, are small vaults, are they packaged up with other ones and made into larger lots, or is a small vault its own lot? If I have a 100 die, does that just go through the same process like everything else as one vault? Does anyone know?
Sorry, could you repeat the question?
So if, for small vaults, is it the same process just runs through for everything? If there's 100 die debt and like 1 ETH behind it, that just goes through the whole auction process just like anything else, right?
Yeah, I assume so. I assumed they had batched them up because the lot size is so big, but I don't know how it works under the covers, really.
Yeah, just have to poke around with that.
By the way, Aaron Boyd and Manuel Garcia, please meet each other. Manu, if you can turn on the camera to show your face, I would like you guys to meet each other and to make this introduction. Manu, if you could take a look, have you seen what Aaron worked on the grant proposal?
No, actually not.
Okay,
Yeah,
great.
This is my face for just a couple of seconds.
Hi.
Okay, so Aaron, Manuel is the guy that I mentioned who can work with you, help with grant proposal. He had experience applying for and getting grant approved by Maker Foundation and by Ethereum Foundation.
Oh, perfect.
So he can probably take a look at the grant application, and I also will take a look, and I have some ideas on what may be the areas worth funding, which could be applied by other projects in the space, like using the trusted compute environments or rollups for basically, there is a possibility for us to allow, well, I hope that there is a possibility to allow individual strategy developers, right, to build a proprietary version of a strategy, right, and share some of the pieces like of that, right, keep some piece hidden, but still keep the funds safe, right, and have a way for the pool members to verify that it was indeed that very strategy runs, right? But that requires very likely usage of some things that were just came out, and it needs both research funding, prototyping, and high risk that it's not going to work. So these areas might be interesting to include in the proposal for Maker Foundation, Bitcoin, Ethereum Foundation, because a lot of it is generic.
Okay, yeah. I mean, I didn't really do much other than went to go submit a grant and just kind of copied the fields that they had in there. But I'm not sure, maybe Manuel could fill me in, but I thought you just kind of create the grant, and then it's up to you to kind of market that idea to everyone, through social media and through outreach.
No, well, I was referring to like grant, for example, we make a grant version, right? Yeah. Specifically for Maker Foundation.
Okay, right.
And there we propose to grant, let's say, $50,000 towards AWS compute costs to deploy X, right? And we're gonna run a keeper with these parameters and so on, the strategy, right? Or we propose to also help bootstrap and signal the community to start participating, right, by putting, some amount of foundation's funds for a period of 3 months to help get this off the ground, right, as a keeper, as a contributor of capital, right?
Yeah,
In
that makes
the DAO,
sense.
or whatever ideas we could come up with, right? For Ethereum Foundation, it might be generalizing this trustless thing, because if we can solve this, then any collateral can come to markets like Compound and to markets like Maker, right? Whether liquidity source of liquidity is traditional liquidity like Compound, right, where it must exist, right? What you borrow, right? And in case of Maker, it just minted, right, upon you putting collateral in. So the problem we're trying to solve could unblock what currently is a bottleneck for getting new collaterals into both of these types of money markets, right? And one of the problems is that everything here, what we do is open, right? There's no way to run a proprietary auction strategy unless you do completely everything yourself, right? But then you don't have any advantage of pooling, right? So you're basically looking for like a collection agency to know not only how to use Ethereum, but also deploy a bunch of its own capital, right? And put it at risk. So that's kind of my thesis for the rationale as to why Ethereum Foundation may be interested in funding it, because it can help unblock the bottleneck that prevents new collaterals to basically for cars and things that we see every day to be on chain, right? You want them to be on Ethereum, help us make it happen. Without it, you deal with a very fragmented and very hard operation where every single collection agency needs to have basically, it must be a collection agency that knows how to price, I don't know, cars, right? And the same guy needs to be a developer, right? The same guy needs to be a DevOps, and he must have a bunch of capital, right? And that's kind of what you're asking them right now. If you want to separate these functions, you need to have a trustless way to let some people build strategies, some people build contracts, some people build pools, and so that we can bootstrap this new use cases. And there is plenty of risk capital in the Ethereum ecosystem that just wants yield. Let's try it out. Why not? Let's just throw it in there and see what happens, right? Traditional world is not like that. So that's kind of the thesis for the grand strategy that I would take.
Manuel, I'll send you the initial proposal we have, and then we can cooperate working on it.
Yeah, sure, definitely.
Okay,
Cool.
Vadim, what else do we have on the agenda? And are you done with this?
Let me just touch on the DAO structure real quick. That was the last thing I was going to touch on.
Yeah.
I know we're running well over time. But just wanted to
basically,
get folks.
Yeah, basically it's the final point for the agenda. So yeah, go ahead, John.
Cool. Right. So obviously, we're going to have all this up and running, decentralized, open access for people to contribute funds, yada yada yada. But it will need to be managed going forward. So I think everyone's pretty familiar with general DAO structures. One option is just you hold a liquidity token, you get a vote. It's kind of like the Maker model, but simplified, where everyone just kind of votes with their tokens. Other option is to use those tokens also to vote, but you do it to vote, either stake to a DAO kind of decision-making member, or use them to vote members in and out. Also has issues with people who just don't care and want to contribute. So what I'm kind of thinking of is a hybrid model that's similar to Moloch, which is you apply to join the DAO with a tribute. There's a required minimum tribute that goes into the DAO. And then the existing DAO members approve or deny your submission. So it basically creates a proposal in the DAO, and in this structure, it would be you would have to have some amount of liquidity tokens to be able to apply to join the DAO and become basically a decision-making voting member. All voting members are just have the same vote power. And if you were to apply with more assets, it doesn't make a difference. So minimum, 1,000 or 10,000 or whatever. Or maybe we can look into having models like Moloch does, where you're just heavily, a member that contributes a lot. You maybe don't have funds, but you can apply with sweat equity or something like that. That's what people, there are other options, but the base would be, we can make it, okay, you have 1,000 tokens. It just shows you have skin in the game. You can apply to join, and then standard Moloch rules apply. Those funds aren't really used for anything as of right now. We'll talk about other interesting things that could be done right there with that, but it's basically to prove you have skin in the game, and then to get to a smaller group of interested parties that are managing the settings. But does that general structure make sense to folks? Cool. And then the next follow-on phases would be, if we want to have the same DAO have multiple bots running with different settings, or have kind of shared liquidity pools across smaller DAOs, people that want to kind of manage their own settings with own pools and maybe share some capital. But that would be more down the line if this is successful. I think to start, we're just going to be one group managing one set of settings, and then people can choose whether or not they want to contribute. And that'll be that.
Wow, excellent. What guys do you think about the expectations of like your own and others in the community when it comes to this proposal? Like, what are the most important things that people may not like, or that may like a lot?
Yeah. Okay. Well, yeah. I mean, it's nothing too crazy there. To start, we might be pretty centralized, where there's kind of just voting, and then an admin key to make changes at the settings just to get something up and running. But this is kind of the V1 goal would to be have it be, you propose a state of the settings. Any DAO member can propose a new state of the settings. It has all the settings listed in the new values. Those get accepted and kind of get put into place, similar to Maker. You're not just voting to change this one setting, change that one setting. So we just kind of figure out the chunks, pool settings, keeper settings, other things like that. And we're messing around with the Aragon right now, either standard or the Dandelion structure will probably be what we're going to go with.
Yeah, I have a comment about the fees. I think that the DAO should not charge any fees for a couple of reasons. Reason number one is to avoid any regulatory risks and to make it safer for us to participate in the DAO, right? Because anything that charges something, it's like an intermediary, and the core function of the DAO then could be deemed as, okay, you guys want to maximize the fees and so on. That's the goal. But the second reason is that until the keeper pool obtains a product market fit, which could be measured by probably assets in the pool, the fees don't really matter and won't make any difference for those who work on it, right? And in addition, that it's probably too early to introduce something with a history of fees, right? Before a critical mass of participants and the quorum could happen beyond just a small group of those who are who represent like a different type of participant that might be interested in joining. Like an average guy a year from now might be different than the average guy today, right? And if you set it here, it might be hard for them to change. So it may not be fair for the average guy within the next like 3 even to 6 months. So that's my take about about the fees, like a Uniswap, right?
It'll be managed by the settings, and it's not too dissimilar from like the fees on like the token sets, like the social trading token sets, and or like a protocol fee if we need something to kind of fund the development on it. Like that's one thing on V2 that was implemented as well. But yeah, it'll likely start at 0, and then maybe we everyone votes to put it in there.
Okay, I would not even have it at all in the first place.
Yeah, that's what we can
like Uniswap, right? They haven't started with that.
No, but they have it now. Like I said, it'll be up to the group.
Yeah, they put that in as an option for V2 now.
Yeah,
which I mean makes sense. Yeah, I'm fine with it.
Great
Anyways.
job, John. Thank you very much.
Yeah,
cool.
John. Maybe you have any questions regarding DAO? Maybe some hot questions you'd like to ask, or
no, I think that might be for another future one when we kind of get it built out a little more. But I think, we got to get the settings and everything set first, and what's going to actually be manageable by the DAO. And then I think, the DAO you can kind of learn as you go. It'll probably be a trusted group to start anyway. And maybe we have a whitelist on who can actually put assets in it make assets we don't want just anyone to be able to risk their assets. While there's like an admin key involved, you start with a smaller group, make sure the thing works, back out the admin key, and then open up for further, more open investment.
Mm-hmm.
Got it.
All right, guys, let's get to the end of this call. Yep. I have also to share the progress on stuff that I've been working on. I will share my screen. Okay, where is this? Okay, you guys see my screen?
Yep.
Okay, so last week on the first community call, work on the risk management framework, because some of the participants, specifically Ryan Zurer, indicated that his level of trust towards using it, right, and deploying capital depends more on the on how we as a group, whatever we build, how do we deal with risk, right? And our qualification approach, how we manage it, and so on. It's one of the things that he mentioned, and he said that is way more important than let's say whether your contracts are non-custodial. And based on that, with that in mind, I wanted to bring a little bit more like a formal approach towards risk, right? Instead of just, okay, dealing with them like here and there. I just picked a typical approach how you deal with risk in a specific group of people or a system, right? Which based upon establishing the context, which we did a great deal of, both within the context of the system where we deploy the capital to harvest the high volatility and liquidations, right? And the operations of a keeper. So together, these two contexts move together, create this cloud of risks that we operate within, right? And then the risk assessment itself is pretty much the three-step process, which is identification, analysis, and coming up with treatment, right? Making decisions on what we can do. And effectively, it looks like this last step is, here's my proposal, to deal with this risk in the following way, with this risk in the following way. This one we do nothing. This one we mitigate. This one we transfer. This one we pass on to I don't know, John, right? Like maker token holders got the risk of of negative surplus beyond the buffer, right? So okay, now they got the risk, right? It was transferred onto them, and that's kind of how it was dealt with. So we need to figure out how to deal with the risk, and of course, I'm not suggesting to transfer it to John or anybody in particular, but to mitigate it to the greater degree possible. With that, I just started putting them one at a time and separating one from another. So all of the risks I see there, I could break them down in 4 categories. Risks within pool contracts, which is the contracts that Konstantin showed. The obvious number 1 is that it may contain a bug, or it could be hacked, right? There might be an admin key loss and so on, right? And so passing it to a DAO, simplifying, optimizing for security, peer review, do bounties. Like one thing we could do is these contracts that are being worked on with the help of Mir and Aaron, if someone else could help just add tests, right? This is one of the write them collaboratively and focus on tests, focusing on tests and peer review by contributors, right? Instead of writing the logic and so on, because then it will be very slow and we won't be able to launch very, very quickly. Peer review of contracts, then bounty, then audit contracts, and optionally we could consider insuring to the Nexus Mutual and so on. So this is kind of the approach, right? To take, and then the same, we have a category of risks at the keeper contracts and bidding strategies, right? Like for example, bid cannot go through as network is congested and so on. Assets bought in an auction can only be sold at a loss. And one risk that one of our participants on the call, Andrew Makarski. Andrew, are you still here? I hope he's still here, but I wanted to thank you for suggesting this. You comment. Oh, here?
He wrote into the chat that he is here.
Yeah, he was checking in.
Yeah, got it. Yeah. I wanted to thank you for suggesting this, and your contribution. You're now a contributor to Keeper Pool. Congratulations. Thank you very much. The risk of bidding above the market price and circuit breakers. So implement circuit breaker that would basically prevent this from happening. As this comment is from Reddit that Andrew shared about a guy who made a bid of like 1,000 or so DAI per ETH. So there are some keepers that are entering the market. So the guy overpaid because he never had a circuit breaker. So that's an example of a risk, right? And then the risks at the monitoring, the infrastructure, which is the ones that we touched briefly, identified on the last call, the price feed performance, inaccurate feeds. This will become much greater with new collaterals entering the space. Oracle failures, front running on higher gas price, right? Even like at the same bid, right? But in the next block, let's say there are the last block before the end of the hour is the next one, and we want to submit our bid right now, right? They may basically outbid in the same block or outbid in the next block. But anyway, these are only some examples, and my recommended next steps and open questions are the following. Next steps is to finalize this list, complete scoring each identified risk, and identify proposed mitigation treatments to governance on the next community call for implementation or to put into the backlog. So the open questions for you on the call, number one, which risks are we missing? Would anybody interested in getting access to the document with the goal to contribute and add a few items, fill out a few fields, and where we completely off or significantly under or overestimates the risks, like the scoring itself. So these are the two open questions I have for you guys. Would anybody, if anybody would be interested in working with me on this, would love to work with you on this document. Thank you.
Yeah, if you publish that, I would take a look.
Yeah, it would be great
same.
if you share or not.
Yeah, we can look to, maybe we can start putting some of the stuff in the docs page that can take comments or work off a Google Doc. For now, either one works.
Yeah, so who were the ones that I should get in touch with, and what are your telegrams and Gmail here so that I can share access to this document? Hey, Andrew. Yeah, thank you. That's your Telegram. Let me new channel.
Yeah, I'll put my email in the thread as well. Don't spam me, people.
Spam
No
free
promises.
is the way to be.
It's getting full doxed.
Is there a way to have a root document with the curated list of links and repository?
I mean, Google Docs lets you do it.
Yeah, and Aaron, what is your Telegram? I'm also gonna just have a small, tiny risk chat.
Yeah. My Telegram. Let me look at my profile.
You think it would be easier if you have like a Slack group or something like that?
Yeah, for Slack, I don't know. It seems like people are moving a little bit away from Slack because it has limit and you need to pay, and it's not like DAO friendly. And Telegram.
Okay.
I feel like Discord is a little more useful just because it has more separation of categories.
Yeah, that's right.
So it still has the channels of Slack, but better than Telegram, in my opinion.
Yeah, Discord's pretty good.
Yeah, we were just considering about Discord. I guess we will create it eventually, but yeah, it's a good point to consider it, to proceed with it faster if there is a strong need for it. We will think.
Okay. All right. I just added Andrew and Mir to the small risk chat, and I will be sharing with you the Google Doc access to that, and I will be asking Andrew to provide his email direct message to or here so that I can share. Okay, great. Thanks, guys. Vadim, please go ahead, continue. I'm done with my part.
Great, thank you, Renat, for sharing. I guess that's it. We shared all our progress. We asked some few open questions, and it was really useful for us, and I hope for community as well. So to finalize this call, does anyone have any questions to ask? If no, I can conclude. So basically, we had a lot of work to do.
What are the expected next steps?
Yeah, that was
sorry.
was trying to start. Yeah, it's okay. It's a very good question. So our next steps are we are finalizing the answer for our hot open questions to finalize what template we're moving with DAO. We're finalizing our settings for peace wartime building strategies. Also, we'll be trying to publish smart contracts as we discussed before. Also, we are planning for the next call to have some final vision of our UI, I believe so. And yeah, and we will present our progress on the next call. And also that points that Renat mentioned regarding risk document. Maybe Renat, John, you have something to add?
No, I thank everyone for the feedback. So I know we're working on the roadmap that we'll kind of put out there. I'll clean up the doc on some of the conversations that we talked about today, and then kind of send, like I did last week, I'll send some kind of more structured follow-up points and any further questions, but really appreciate everyone's contribution.
Yeah, you also mentioned roadmap. I also expect we will create some roadmap for products, so also get updated the community for our plans and features we would like to have in the futures. I guess it would be helpful as well.
I will also add to have some progress or probably done the grant proposals.
Yeah, great. Agree.
Excellent. Thanks, everyone. Thank you, Vadim. I really enjoyed this second call as well as I did the first. So I hope you will keep up great work and will make it as enjoyable in the future. Thank you very much.
Yeah, thank you.
Have a good
guys.
day.
Good job,
Bye, everyone.
Bye, guys.
Bye.
See you soon.
Thank you. Bye.